If you've been following the saga of the apes, of GameStop, of AMC, you know it is intimately tied with the developments of kind of insidious actions on the side of the shorts and some other things such as Robinhood taking away the buy button. But there's big intricacies to this world, and one of them is very much this concept of aggressive, manipulative shorting. And that's something that has been a thread, a pillar of what this community has been arguing about, trying to get people to look into it. And what's awesome about it is this all really got going. It got mainstream media attention a little bit over a year ago. So fast forward to this moment, there is some serious regulatory justice movement in this world of potentially manipulative shorting. So I'm actually pretty excited to be sharing this story with you. Justice Department is pursuing wide-ranging investigation of short sellers, sources say. Muddy Waters' Carson Block served with a search warrant in the probe of illegal trading tactics. So I know, like I said, there's a myriad of things that the apes are trying to point out. For example, payment for order flow is just another one, but it doesn't particularly relate to this. That's more of a structural thing. We've been talking about pattern day trading, the interesting lack of information in 13Fs, the opaqueness of FTD reports. I get it. It's a whole bag of things, but one of them is clearly what's going on with shorts, and are all of their tactics and strategies truly above board? And a lot of people, maybe for very good reason, have been saying, no way, Jose. Well, recently, over the past couple of weeks, we have been getting developments of the Department of Justice, the DOJ. They're starting to get involved, which to me, to my understanding of how the system is set up, that's pretty big. Usually this is an SEC thing, and now when the DOJ is getting involved, that's really rising some eyebrows. Like, it's getting people saying, whoa, what is going on here? And this is tied with, like, as the numbers are going up, they're looking into more and more, and then it's relating to these other crazy stories. Well, this is the most recent installment of this whole crazy debacle, and it's very interesting to dive into. Federal prosecutors are investigating whether short sellers conspired to drive down stock prices by sharing damaging research reports ahead of time and engaging in illegal trading tactics. People familiar with the matter said. So think of these big groups, these organizations, and there's, like, I guess I have to say the word allegedly a lot in this because it's actively a legal case, but think of your Citron Research, your Hindenburg, your Muddy Waters, of these people who really, as soon as they say there's against something, they have such of a following, they have such a clout that the stock ends up tanking. I've seen this many times myself in real time, where I've just been buying a stock and then all of a sudden you're like, hang on, Citron just tweeted that they have a new research report on company whatever, and that company tanks just because they have that much of a sway within this particular industry. Well, now there's people pointing out that it might be even worse than that. There might be people actually sharing their research reports, and there's now new accusations of were hedge funds paying them to write these things. It gets super, super wild, but this is what you need to know from a high level. One tactic under investigation is spoofing, an illegal ploy that involves flooding the market with fake orders in an effort to push a stock price up or down. Now, I have a little bit more of an explanation for this. Spoofing is essentially high-speed bluffing in which one trader dupes others into transacting at artificially high or low prices. A spoofer, for example, might offer to sell a big block of shares at $10 when the last sale was at $10.03. After other sellers rush to match the lower price, the spoofer quickly pivots, canceling his sell order and instead buying it at $10 price he generated with the fake bid. Repeated enough times, spoofing can produce big profits. Obviously, this tactic is illegal, but people are still doing it. It's been outlawed since 2010. But in 2020, the Justice Department had charged 20 people with spoofing related crimes and collected more than $1 billion in fines from banks and other financial institutions. So this, once again, this is just like one little example of the type of thing that is played out. I'm not saying this is it and this is exclusively the issue, but when you pair that up with that's their tactic in terms of like market structure, and then you add that together with this type of thing where potentially, allegedly getting paid to write some of these reports, sharing the reports with other people so you have more money driving an equity down or up, just manipulation in general, this is crazy. So Carson Block, the fiery short seller behind Muddy Waters, he was another person recently served with a search warrant by FBI agents in October. Federal agents took computers belonging to Andrew Left of Citron Research. He was another one. So a lot of these people, these like kind of short report, or like you post a report and you're an aggressive short seller, a lot of them getting questioned by the DOJ as we speak. Never the most popular camp on Wall Street, short sellers have been an essentially bruising few years. So I wanted to bring this part of it up because I want to make it explicitly clear where I am. Am I, Matt Kohrs, against shorting? No, I am not. I am not whatsoever. I am against manipulative short selling. If you think a company is going to go down because it's being overvalued, if you think they have questionable sus accounting practices, if you just think they're in a bad industry, if you think they're in an industry that's just going to be less popular, I am fine with that. You in the free market have the right to bet if you think something's going up, down, or sideways. I am not generically against shorting. I am against manipulative shorting. I'm against manipulation. It doesn't matter if the manipulation is pushing the stock up or down. I shouldn't even say manipulative shorting. I'm against manipulative tactics. I'm against manipulative trading. I want a true free market, not something that's being manipulated. So with this, yes, I get it. Short sellers have been beat up, and I think some of them deserve to be beat up by the justice system, by people like me streaming, but there are other ones who they're actually just finding fraudulent companies, and I don't care if they make money on the way down. The company is fraudulent. Good. But it's been an interesting year with the connotation around shorting. Still, they can play a crucial role in uncovering corporate frauds. One short seller helped turn up the heat on Enron. That was a good short. We could talk about Luckin Coffee. Honestly, the list goes on and on. Others were early to sound the alarm in the 2008 financial crisis and most recent scandals, including Wirecard AG. The list is long of ones that were good, legitimate shorts, but that is completely different from the world of this type of manipulation that we see. They are two very, very distinct things. Moving on. Columbia Law School professor Joshua Mitz, who published a 2020 academic paper entitled Short and Distort that was critical for short selling tactics. If you haven't heard of him yet, we actually recently covered another story of his kind of related to the SEC and more of a GameStop thing. But anyway, more specific than this, he has been advising the Justice Department in its investigation. People familiar with the matter have said Mr. Mitz has in the past also served as an expert for companies and executives. So this is a Columbia Law School professor who has been really learning about the tactics, or at least some of the tactics, manipulative, insidious tactics that go on in the market. And the fact that we're just seeing his name over and over again, I actually think it might be an interesting person to try to reach out to and bring on for an interview on this channel. So if you have any weird connection to the Columbia Law School professor, Joshua Mitz, let me know, because I think he could be an awesome, awesome interview and really share some of his knowledge with us, as long as it's not an ongoing case. But overall, I wanted to cover this because it does relate to manipulative shorting in the market, something I am clearly, vehemently against, and it looks like some of them are about to have to answer some very painful questions from the Department of Justice. Obviously, let me know your thoughts in a comment below.